And the real question is what will happen to that consumption in 2024? And given that the savings rate has fallen very substantially, I believe that consumers run out of steam.
Priya, what do you think about that?
So I have some sympathy for that as a tail risk.
Okay.
But here's the counter to that. If the labor market remains healthy, and the unemployment rate is in the 4% type range, average hourly earnings running 3.5 to 4 with inflation at 2. Look at real incomes, they're growing. And so the consumer can continue to spend, we can moderate. And I think the data we've seen shows some moderation. Does it moderate to recession levels or does it moderate to normal levels? I think that's the big question.
Right.
So I think we're in a soft landing right now. Will this persist? The trillion-dollar question, I think, depends on the Fed. Can they cut quickly enough? Can they taper QT quickly enough? If they do, perhaps we can continue in the soft landing. I do think we should keep in mind that point that maybe the consumer will slow down faster. I think we have to be mindful of that. We're looking at every revision, every data point. In corporates, look at every company and look at the guts of that company. Can they handle restrictive monetary policy? But for now, I have to say that the consumer looks strong. The corporate, look at corporate fundamentals, very strong and a lot of demand for corporate paper.
So if you're adding to the long end on any kind of move lower, what do you do with the front end? Like, is that appropriately priced based on what you just said about the eco data and then where you think the Fed's going to go?
I think so. So in a soft landing, I would argue the Fed can cut to 3%, markets pricing in 3.3. So we're not pricing in much below that. In a hard landing, the Fed's going well below that 3%, 2%, 1%. So I would say even owning 5-year notes, I think anything shorter is very dependent on when do they start. Is it March or May? But the moment you get into the 5-year or beyond treasuries, it's about the total amount of cuts, less about the start or do they go 25 or 50. And I think those cuts are fairly appropriate in a soft landing. Much more can happen in a hard landing. If that tail risk happens, those rates are going much lower. So I would say even owning 5-year notes on a backup makes sense. If you're nervous around duration risk, buy 5s.
Yeah.
Maybe you don't have to go all the way to the 30.
Well, if that scenario does start to play out in terms of the cuts and when they start here, what does that mean for QT? Is that basically done? The quantitative tightening done? They basically reverse that or at least stop it?
So what Chair Powell said in the last press conference was they can continue QT well into the cutting cycle. I don't really believe that they can because
but isn't QT partly responsible for that perception of tight financial conditions?
It is, but the Fed sees it as that's something that they're doing with the balance sheet with excess reserves.
Yeah.
But New York Fed or ex-New York Fed Lori Logan, the Dallas Fed president, actually brought up a very interesting idea of starting to taper QT when RRP gets to a low level. I think they're getting close. RRP is at 600 billion.
Yeah.
It gets to 300 or 200 billion. I think the Fed starts to taper QT so that they don't get that September 19 type repo spike. I think that's what they really want to prevent. So I think a combination of rate cuts, tapering QT can actually allow the easing in financial conditions to remain.
All right, Priya, always great to talk to you. Priya Misra there, fixed income portfolio manager at JP Morgan Asset Management. Help us count down to the closing bells. Just about 2 minutes away here. Stocks looking like they're going to end the day in the green. A fresh record high for the S&P here, up about 0.5% here on the day. Yields moving lower across the curve. Our full market coverage right here on Bloomberg starts as we take you to the bell and beyond.